Hi, welcome to Coffee Chats here. My name is Dennis Vo, CMG Home Loans, and I'm with.
Ryan Aulenti with Compass.
All right. Well, welcome. We wanted to start this because we do get frequently asked questions from home buyers and thought it was a good idea to kind of just pool it all together so that we can share it so people can take it, see it, and obviously reference back to it. So, Ryan, can you tell us a little bit more about yourself?
Yeah, I mean that's a good way to put it, Devo. I mean, we really wanted to get together here to kind of explain to people, to our clients, as well as people who maybe aren't our clients yet, exactly how the industry works, and really try to give some insight into common questions and problems that people have without having to repeat ourselves every day. So a little bit about myself here. I've been in the industry for 11 years now. Time flies.
Yep.
We're getting older
Yep.
every day. Everyone gets older every day. And I mean, I love it. It's a very dynamic industry. I mean, arguably the most dynamic, interesting market in the country, as yourself. Here in South Florida, mainly focused in Miami. I do most of my business in Miami, Miami Beach, and I live in Brickell myself. So I sell where I live, of course. Um, and I mean, I started doing this in 2013. So I've I've sold a $40,000 shack, a really a home in the hood. I've sold multi-million-dollar penthouses, celebrity homes, really done it all here. So really looking forward now to share some insights and some knowledge with my clients and audience. Now, I mean, you and I have been working together for a long time. I don't know. It's been a long time. 6 years, 7 years at this point. I'm not
6 years.
sure.
6 years, right? Yep.
6 years. Okay,
Yep.
cool. So, I mean, you've been in the industry even longer than I have on the lending side. So, tell us a little bit about that.
Yeah, I my first sales job was a door-to-door salesman in college. So I sold entertainment books and coupons door to door,
I actually did not know
and
that.
after that, I sold panel boards and transformers for General Electric, and did that for several years, and then realized that that's not necessarily my passion. And then I joined a national home builder, and I worked for them for 12 years. And then held various roles from a loan officer, sales manager, branch manager, managing a team. And then after that, I decided to pivot and go to retail lending and kind of source my own business. And I've been doing that for 6 years. And I moved to Miami 6 years ago, starting that, and here we are now.
Here we are. I mean, that's really cool. I mean, I feel like you've been in all different facets of the lending industry, so you could add insight into whether someone's buying a new construction home in a new community here in South Florida, or the typical resale here, or the more common resale. And I found that working with you, you almost know everything. So if personally,
Not everything, not everything, but I don't know what I don't know. But
personally, when I have a question about lending, I always go to you. And sometimes, look, not everyone works with everyone. Maybe someone doesn't. Maybe someone only speaks Spanish and they don't want to work with you sometimes. But I'll still give you a call because you're always there
no, I appreciate
for me.
that.
So
Thank you.
I appreciate that. Now, I think one of the biggest things is that we've done a lot of deals together. I don't know how many, but they come in all different shapes and sizes. And I mean, sometimes they'll call you first. Oftentimes they'll call me first, or it'll be a new a new contact. An internet lead is what we've done a lot of, whether it's been from Zillow, or
Yeah.
a pay-per-click ad or something like that. So it's different per person, per contact. Every client is different, but we oftentimes get the same types of questions. So I would say the first thing that I get is always, even though I'm not a lender, one of the questions that I always get is, what are the rates these days? I heard this, I heard that. And it's complex. And I tell them a little bit. I always say, hey, look, I can't tell you an exact rate. What I'm going to do is refer you to my lender, Denisvo, Devo,
Yeah.
as we like to say
Yeah.
here, and explain to us how you explain to them. Like, how does that work? How does the industry work?
Yeah, I mean, in terms of mortgage rates, that's just the number one question that we do get right out of the gate
Exactly,
is
the number one thing.
what are your rates? And that's a loaded question because there are so many things that go into a mortgage rate. I mean, you go your credit score, your down payment, obviously your residency status, the property type. There's just a multitude of things that go into it. So it's kind of like it's very, very high level when people ask what the mortgage rates are without knowing the specifics of their credit profile, right? So, and a lot of times the misnomer that we get in the industry is people referencing bankrate.com and say, okay, the rate that I saw is a lot lower. And what a lot of people don't understand is you haven't necessarily applied and gone through the process to know if that rate is actually eligible and you can get that rate. So Bankrate is actually not necessarily a lender, they're a marketing website. So they're giving what's called advertised rates. So, that's a rate that is considered absolutely top tier credit scenarios with putting a significant down payment down and an excellent credit score of 780 plus. And when you actually go through the process, and I get this feedback a lot from buyers, is when they go through and they do it, the rate that they end up with after their credit score and their credit profile has gone through is a lot higher than what's advertised because they're just trying to drive traffic through their website. So in terms of mortgage rates, it's best to basically go through the application to figure out what is the best rate that is available to you, what options, and you have the ability to shop at other lenders though too as well, because as long as you kind of do it all within a short time period, people are always concerned about their credit getting
Oh
pulled.
yeah, that's a big deal. I mean, I always assure clients, I'm like, hey, maybe they've already spoken to someone, and I say, look, give my guy Devo a call here, and you're not going to get hit again on your credit score because is it a 30-day or a 60-day or 90-day window? I forget. I believe it's 30.
Typically, you want to keep it tight within 30 days.
Yeah, that's what I thought.
The
So,
optimal band is, obviously within like 14 days. But I mean,
okay,
again,
yeah. So if you're within 30 days and
Yeah.
you do 5, 6 hard inquiries with the same asset, so if it's a lender, then you're good. If you go get another, if you have a dealership run your credit to buy a car, that's not good. So don't do that. We can get into that later, but do not go buy a car when you're trying to buy a house. It's a bad idea.
Yeah. And just to clarify on that, I mean, the bureaus respect the fact that you're going to shop for a mortgage, or you're not going to do it at one single source or spot.
Exactly.
So be a smart consumer, shop and figure out what the best options are, but you got to do it within a condensed time period so it counts as one. And hard pulls do hurt your credit if you just do it continually over time, increasing your credit limits, applying for new credit like you just referenced, auto loans, getting a boat, whatever the case is, personal loans. So when you apply for different types of new credit, that it will hurt your credit score.
Okay, for sure. I mean, that's one thing that we can advise. I sometimes help clients with that small thing. I've kind of, I would say, in a sense, mastered the broad credit game and the credit market.
Yeah.
And sometimes that might mean that someone's not ready to buy a property, and we might give them hints or suggestions as to how to get ready by improving their credit score with things like that. Maybe you call your bank and you ask for a credit increase, and then you pay off some old bills or something, and maybe
Sure.
it's best to come down 6 months later. And that's one thing that I always say is that my top priority is to be honest
Yeah.
and be a trusted advisor
Yeah.
to my clients. And the most important thing is to make them feel that. So, like, I don't really care if I get the commission now. I don't need to get paid now, or I could get it in 2 years. You know,
Right.
the most important priority for me is to help them make the right choice, right? So we see that throughout the process.
Yeah.
But that's really one of the first times. Now, just to hit back on that rate thing and to just talk about how complex it could be, it also could depend on the day,
Right.
and it could also d- depend on the property. I
Yeah.
mean, if you go from a $2 million property or a million five or whatever, what's the jumbo loan limit now?
765.
Okay, so if you're doing a 765 loan, now you're in a jumbo loan, and
Yeah.
that changes things entirely.
Yep.
So it's a really complex question industry. So that's why you have someone like Diva to kind of like walk you through that.
The other thing is it's a lot of people don't understand that rates are fluid, right? So
Exactly.
they change.
Change
So
it every day. So tell us about like why they change. Like, I mean, from what I was seeing on the news a couple weeks ago, it was everywhere. Everybody knew about it. The Fed just signaled a directional change in their strategy with interest rates. Now, that's really the Fed funds rate, and people get confused. They think, okay, the Fed just decreased the rates, so now interest rates are down, or now mortgage rates are down, and those things are very different. Now, can you explain to us why that's the case, and like how those follow rates? I mean, sorry, how mortgage rates follow the Fed funds rate, and how they are all interconnected?
yeah, I mean there lot of traffic and questions around the Fed fund rate and the mortgage rates, and mortgage rates change on a daily basis and by the minute, but mortgage rates dropped ahead of the Fed fund rate cut
Exactly.
because the markets priced that in already, knowing that rate cut was happening. And like you alluded to before, Ryan, the Fed fund rate is cut, not mortgage rates. They're completely different. So to clarify, the Fed fund rate is the short-term overnight rate that banks lend each other money.
Exactly.
It has a direct impact on home equity loans like HELOCs. It has impact on auto loans, the cost of credit in terms of auto loans, credit card APRs. So when they drop that,
General liquidity in the market, which
Exactly.
affects everything: the stock market, auto loans,
Yeah.
everything. But how it affects everything is variable based on the market in that day.
yes, correct. And they change again. A mortgage is considered a bond, right? So it's a fixed income instrument that is going to be repaid in 30 years. So those get bundled up into loans, into a bond, and then basically sold on the secondary market. Depending on the interest rates, if it's higher or lower or what's going on in the market, that impacts what that basically bond can sell for, and that ultimately predicates what mortgage rates will be. So based off the liquidity of the market. So that's why during the pandemic, you did see rates drop to historic lows because the Federal Reserve was also buying up a bunch of these bonds or mortgage-backed securities, and that's why you saw rates drop into the 2-3% because, to your point, there was massive liquidity in the market.
Exactly. And look, in the end, as you don't need to know all this stuff as a consumer, but it helps to have a good background in it and know
Yeah.
that in the end, when you buy a property, that property is your asset, but the loan that you get is your liability. You owe that money to the lender, and the lender, to them, that loan is an asset. Now,
Right.
they can do with that what they will, but in this case, as Dennis just explained to us, they oftentimes will repackage it. So if you buy a property, you might get a letter in the mail a week after you close saying your your loan is now being serviced by this bank.
Right.
And people get confused on that. It's a very complex industry.
Yeah.
I mean, the financial industry is complex,
Yeah.
and they make everything more complex. So that's the bottom line. It's okay to not know everything, but it's good to have a solid background in how this stuff works.
Yeah.